Hello and welcome to What Are Your Thoughts, live from the compound. My name is Downtown Josh Brown. I'm here with Michael Batnick, as always. We're going to play our favorite game.
Is that your birth name?
What? Yes, that's on my birth certificate, literally. Michael does not know what I'm going to ask him. He doesn't know. I don't know. I don't know what you're going to ask me. That's how we do it. Stick around. We'll see what's going on. All right, it's been a while, Mike, but I wanted to ask you about something that happened yesterday. Then I have a bunch of other stuff. But the negative fee ETF article came out, and everyone said, all right, that's it. That's the top.
Top of what?
I don't know. We'll get to that, but I wanted to ask you. So
top of the morning?
I wanted to ask you about the structure, whether or not you find it offensive, or the marketing. So basically, this new company, I think it's called Salt Financial, is going to do a low beta portfolio in an ETF, and they're going to pay you 0.05 to hold on to it until the fund reaches 100 million, and then the waiver goes away and they start charging 29 basis points. What do we make of this? What do you make of this?
I don't have any strong opinions. I'm like waiting. I'm feeling my way through the hot take universe.
Okay.
And I don't think it's, I think it's kind of smart on their end. They're going to spend $50,000. This
Up
is like
to 100 million, it would cost them 50 grand.
This is the best $50,000 that they could ever spend.
Okay, because what's the alternative? They charge 0%, don't spend the 50, and use that 50 in a marketing campaign?
Where? In Payson and Barron's?
Well, that's the thing. How do you even market a new ETF these days?
On Twitter. I think they did a really good job of marketing it. Now, they're very transparent. They say that the fees revert to 29 basis points.
Oh, they're not lying. Yeah, they're not lying.
By the way, what's lost in all of this is that 29 basis points is still not a lot of money for a min-vol product. I'm sure that iShares and Invescos are cheaper, but what are we even talking about here?
For a low vol, a low beta or a low vol large cap ETF probably costs like 20 basis points.
That could have been like an alpha strategy back in the day. That was, I don't know if that was like a 2 and 20 product, but
right, that was an alpha strategy.
So
back in the day.
I think it's all good. I'm curious to see where this goes and who follows suit.
It's all good. Do you think that people?
What's bad?
You think that? I don't know. So I had a hot take. My hot take is it's a crock because, like, why do you need the 5 basis points being paid to you before it raises 100 million?
That's not the point.
I know it's not.
Well, Ben Johnson said that this is a PR war, and I think that's probably right.
That is he is right. He said it's not a fee war. Now it's a PR war. Yeah. I totally agree with that.
That's enough.
I'm not that mad about it. It's just like, all right, we're gonna play games with words now. You know, I'm like world weary over that stuff. All right, go
ahead. Do you know the scene in Fargo where William H. Macy is in his office and he's lying to the customer about what he promised him?
The true code.
No, I'm sorry. That's not the scene.
Okay.
It's the scene with, what's her name?
With Frances McDormand.
Frances McDormand, who's
amazing. Scene. Yeah.
And he said, like, we're going to play games now?
Yeah.
And then he flees the scene?
Yeah.
Anyway, he was front and center because of the news yesterday with his wife.
What was the news with his wife? Who's his wife?
His wife is the Real Housewives lady. I forget her name.
Felicity Huffman.
Yeah, that's his wife.
That's his wife?
That's his wife.
Oh, no way. So somebody was unearthing old tweets of hers.
Yeah, that was amazing.
And one of hers was like, what's your best hack for back to school season?
Is there any reason to have any tweets over like a week old on your stream, on your feed? Just get rid of them. Anyway.
Somebody should provide a service where they just go back and... I know there are software programs you could delete all your old tweets. Somebody should make it automatic.
So I wrote about a study that was done, I think like maybe a few months ago, that quantified how portfolio managers behave after a winning streak and after a losing streak.
Is it a white paper?
It's a white paper. It's from Essentia Analytics. And you had Claire Flynn Levy in here a few months back.
Yeah.
So she's the CEO of the company.
Yeah.
And they quantified that people do change their behavior after winning streaks and after losing streaks. And what happens is that people tend to, I don't know if revenge trade is the right word, but their turnover certainly increases after a losing streak.
They do more after they've lost money.
Right. And so I think that this is certainly intuitive. Whenever I go play blackjack, I behave the same way. I dig in when I'm winning, and I play very conservatively because I don't want to give anything back. And when I'm losing, I'm like, screw it. Like, let's...
Mike, but you're not saying they take more risk or double down. You're saying they just have more transactions.
What's the difference?
Because we know a lot of people who, after they lose money, they don't want to do anything. They get really conservative and they start selling.
These are professionals.
Okay. Right. No, of course. All right. So you're saying like, so how do they behave after they win? Did they get more conservative?
No, the opposite.
They bet even bigger.
Their turnover increased, and when they were winning, I think they toned it down. So I made the point that that's probably one of the hardest things to do is to not try and win your money back right away.
Oh, it's the absolute worst. Or people that try to win it back in the same stock.
Oh, I was the king of revenge trading.
Or revenge averaging down. I know I'm right.
Yeah, you don't have to. I think Warren Buffett has a quote like you don't have to make it back the way you lost it. But so not Warren Buffett, Druckenmiller was on Real Vision a few months ago.
Okay.
And he said that one of the most important things is for a manager to know when they're hot and when they're cold. And when he was cold, he would invest very small amounts, and he would cut his losses. Why are you laughing?
Science.
Dude.
All right.
Are you fucking kidding me?
When I'm hot and when I'm cold? Are you fucking kidding me?
You don't know when you're losing money? I mean, it's pretty obvious. The point is, Druckenmiller...
Hold on. Do you believe in the hot hand like in basketball and in football? Like
football?
Oh, this guy's got the hot hand. I'm gonna bet this quarterback for next week.
It's not that the manager is hot. It's that the market is conducive to winning trades.
Oh, all right.
So when the market was in his at his back, he would bet huge, and when it wasn't, he would throw out little feelers and bet very small. And I think that's probably like the single hardest thing for not new investors but all investors to master.
All right, so maybe that's what I'm laughing at. Like Druckenmiller is incredible. I don't think most investors are incredible and will have that sense of when they're hot and when they're cold and be able to execute.
Of course.
All right. Here's my next one. 2019 looks like it might be the year of the IPO. We've actually talked about this before, about just the dearth of IPOs in general and what that says about market structure or investor risk appetite, et cetera, et cetera. So Koyfin Charts did a really good post quantifying all of the deals they think come to market in 2019. And there are some like well-known names. Slack, which we love. Uber and Lyft are going to be huge deals. Pinterest, which I'm not sure why they waited.
Is there a question coming?
Well, big booms in IPOs have typically been markers of a market top. So is this bittersweet? How should we feel about it?
Is this bittersweet?
Is it bittersweet to see all these companies go public and say the capital markets are back, but then remember that the big booms in IPOs have taken place toward the end of bull markets, not toward the beginning, for obvious reasons.
Yeah, but this is different because it's the big IPOs that are coming on the market. So
Facebook was 2012?
Yeah, but this is like a bunch of them. So Alibaba was a huge one, and that was like
14, 15.
But so this is not an IPO boom in the sense that it's like just a tsunami of stocks coming public. It just happens to be the big ones that we've been waiting for.
It's notable deals where people know the names. It's not like there were 1,000 of them.
So let's stick with theme of is this a top? So I don't know if you saw this news that just broke, but Oaktree sold 62% of the company to
Brookfield Asset Management.
So which is like a big alternative shop in Canada. Is Howard Marks calling the top? I don't know that he sold his personal stake, but what do you think?
No. So what's happening is he and the Oaktree executives are going to retain control of 38% of the combined company, and they're going to keep running Oaktree as a separate business, but under the umbrella of Brookfield.
When you say retain control, well, 30% is not control.
Like
but
he's not.
You're saying,
sorry, retain control of Oaktree, but they're gonna own a big piece of Brookfield. Like they're not going to be employees; they're going to be part owners.
All right, so you're saying that this is not indicative of where Howard Marks sees the market because he's been cautious.
He's not cashing out
for years now. Okay.
You know, there were a lot of takes immediately.
Well, he could be cautious on the market and still bullish on his business.
Well, look, 100%. There's money changing hands, and he has sold out a big piece of Oaktree as a result of this. But he's not like 100% out. You remember when? I don't know if you remember this. Sam Zell, like the biggest property owner in America, sold equity office properties in 2006, like at the top of the housing market, or 2007. That was a cash out. That was like, okay, I'm out. It's all yours. That's not what this is.
Got it.
So I don't know if there's a read through to, but yeah, he's been cautious anyway. So him getting liquid and bringing in someone bigger to take some shares off their hands, I guess that makes sense. Be nice to be Howard Marks today. Most days. Pretty big number. I got to get to this. I wasn't going to do it, but then I said, how can I not do it?
No comment.
No, you have to. They traded Odell.
Yeah.
My knee jerk, as usual, is like, what? but maybe that's not right.
Nah, it's pretty bad.
It's bad, right? Is it bad because now there's $33 million in dead cap space next year?
It's all bad. I mean, this just shows an obvious lack of preparation and planning at the highest level of the organization. John Maurer is a joke. Gettleman is trash.
Why? Because they gave him a huge extension last year. Why would you do that if you weren't going to keep him?
6 days ago or 7 days ago, he said we didn't sign Odell Beckham to trade him.
6 days ago?
Yeah.
Right.
So I was mad that we drafted...
Was that to get a better deal from the Browns?
I was mad that we drafted Saquon Barkley because I think that running backs don't really matter. They're interchangeable, and he's probably the best in the league right now.
They sell jerseys, though.
But so what? He took us from 4 wins to 5.
Yeah.
We should have taken a quarterback. Now we have a $29 million quarterback who can't throw, and I love Eli. But it's just we're boned.
You want to hear my theory?
No.
Well, I'm going to tell you anyway. I think Odell, behind the scenes, was making a big deal about he wants the Giants to go for a quarterback that could start for this season.
So what's wrong with that?
And they're not going to do it. They're going to do an offensive lineman or something with the 6th pick.
It's just terrible.
It's all gross. My kid has 4 Odell jerseys. I haven't even told him yet. I hope nobody tells him at school. I'll tell him tonight. I'll sit him down with like hot cocoa.
So Ben and I were talking about this on the podcast, and we didn't really put much thought into this, but we just sort of spouted out like Mount Rushmore of finance.
Okay.
So
we need 4 though.
What's that?
4? Does it has to be 4 people?
It has to be
4
people.
heads.
So I threw in Bill Gross just because he basically invented the bond fund in its current form.
Wait, Mount Rushmore of investing?
I just said finance, so you could put Markowitz there. It's a big topic.
Yeah, like finance, I would put like J. Pierpont Morgan.
Yeah.
So I guess let's do investing though, just for argument's sake. I'd put Bill Gross there.
Okay, so I put
Buffett.
I put Gross, Buffett, Bogle, and Druckenmiller, and people were like, "Well, what about?" It's like, dude, there's 4 people. Who do you want me to kick off? So
Druckenmiller over Soros.
So 5, 6, 7, and 8 were like Soros, Thorpe, Simons. And those were pretty much the ones that kept coming up.
Thorpe. I mean, no one knows him, but I know how important he is. Who's the other one?
Simons and Soros.
Simon. Yeah. Okay. No other hedge fund manager?
2 people said Dalio. I was surprised he didn't come up.
I almost feel like Dalio over Druckenmiller, but Soros over Dalio.
So Druckenmiller never had a down year in 30 years.
But what are we talking about? Are we talking about just pure returns? Are we talking about like influence?
Well, I don't know.
Because Bogle wouldn't be on there if we were talking about like how much money they made. Mm-hmm. All right. I don't.
That's tough.
I don't love that. I would maybe break it up into like trading and then one for investing, right? I don't know. Okay. This is my last one. I was thinking about AirPods. I just learned this weekend that you don't need the phone anywhere near you to be on a phone call with the AirPods in your ear because they have a speaker. I was like,
wait, what?
I swear this is true. I was walking around my house with my AirPods on a phone call on Sunday, and I'm like this, talking into my phone.
Come on.
I swear to God. And Sprinkles is like, Josh, what are you doing? I go, I don't know. What do you mean? She's like, with the phone in your mouth.
All right, Ben, delete this part.
No. But I don't read directions to anything, and I guess it just never occurred to me that they're like a phone.
All right, so that's really a statement. You don't have any, there's no thoughts that you want.
No, I wanted to ask if you knew that, and how do you figure it, and how you learned it.
I didn't. How did I learn it?
Like, how'd you know that you didn't need your phone near you to talk to somebody? And what's wrong with me? All right, I'm done.
Okay, last thing. So we're bumping up against 2,800.
Yeah, again.
We were last time we did this. Oh, now we're above. Is this it? Is the next 10% move?
Wait, we're above 2,803?
2,803. What are you, an economist?
Where are we? Are we above 2,800?
2,810. So.
Okay, excuse me. I just need to play some hedging trades.
Is the next 5% move higher or lower? Is this it? Is this it, or is this going to be false again?
America, please don't invest based on this. I think new highs.
New highs.
I think new highs. Well, what are we, 4% away on the S&P?
I can't do that math that quickly, but
roughly
ish. So.
Yeah, that's what I think. And I don't. People be like, well, where's earnings growth? What if earnings growth is troughing? We don't. How would you know? I don't know. So just on pure price action.
The next 5% move is not affected by earnings.
No, earnings season's over. You're not talking about earnings again substantively till probably the mid-quarter when companies start either guiding lower or higher, and people don't even react to that anymore. So earnings out of the picture. Fed's not doing anything. Can you imagine he announces like a real China deal? You think people are selling that news? They're buying it. So I don't know. Please don't buy or sell anything based on that. We don't do advice here. But that's my gut. That's my gut, and my gut is very big. All right. If you like what we're doing here, please go ahead and subscribe to the channel. Go ahead and smash that like button as well if you haven't already. Leave us feedback. We love your comments. We respond when we can, and we will talk to you soon.